Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1307A, and today's date is June 15th, 2017, and the title of the episode is, The Next Economic Crisis is Going to Leave the Majority of People in Shock. Let's get into the economic collapse financial news. Let's head out to Greece, and Greece, well, they've been in trouble for a very long time. Unemployment is very high, 22%. It's bobbing up and down in that range. Nothing has improved in Greece whatsoever. They're continually implementing austerity. They're selling off their assets. Why? To get more debt. Haven't they realized at this time that as they take on more debt, the situation just gets worse and worse and worse? It doesn't improve whatsoever. I mean, the people voted saying that we don't want these bailouts anymore, and they're still getting them. Well, the European finance ministers, they've reached an agreement to bail out Greece once again. Yes, they are getting another round of 8.5 billion euros, and again, they're going to discuss a debt extension. Now, there was a payment that was coming up. They kind of basically went around it with another tranche of more debt, and they're in the same situation. There has been no improvement whatsoever. Yes, they've been manipulating a lot of the numbers to make it look like they're improving, but think about it. They're selling their ports, their railroads, they're selling their airports, the pension. They've pushed this out many years where they're cutting pensions. More and more people are being let go. Austerity is being implemented on the people. Yes, they can manipulate the statistics, but the hard facts is it is not getting better whatsoever. Out in the UK, we can see no matter what the central bank is trying to do, the people are still saying, listen, we want the Brexit. More than 70% of Britons still believe the government should push ahead with the Brexit. They don't care. They want it done. And we can see that the first round of talks is going to happen June 19th. And think about all the things that have happened prior to this, because they knew the talks were coming up. They're trying to derail this any way they possibly can, with false flags, with events. They don't care. As long as they try to derail this, postpone this, they want to stop this. But it looks like this is being pushed forward. Out in Canada, we see the housing market, well, things are not going well whatsoever. We see Canada's existing home sales, they crashed by 6.2%. And this is pretty darn bad because this is a huge drop in existing home sales. And it looks like the bubble, well, it could be popping right now, because as we can see in many areas of the country, many areas around the world, the housing bubble has been pumped up to extremes. And as we know, when these bubbles pop, everything is going to come down because everything is attached. The mortgage, the mortgage departments, the banks, the loan centers, the lumber yards, the concrete, the steel, the plumbers, the electricians. It's all connected. And when real estate comes down, it is going to be a complete disaster. Now, today we saw Bitcoin, and it dropped quite a bit today. And it rallied over about 80% last month, and it just came down about 25%. Now, what happened was there was a supposed cyber attack on the exchanges, and they were getting hit by a DDoS, and services were down, they were slow, and also people are very worried about the bill that was introduced where they're going to be going after Bitcoin or any type of cryptocurrency when you're leaving the country, entering the country, and we can see that people were, something maybe I should get out of Bitcoin. But we could see at this point that it's starting to move up once again. Now, I'm not saying that Bitcoin or cryptos are better than gold and silver. Gold and silver, well, they are physical. You can hold them. They retain value. Right now, cryptocurrencies, the way I see them, this is in the beginning of, like, say, the dot-com phase, where you saw a lot of dot-com companies. Now we have about 750 crypto currencies out there today. This is the beginning stages. Now, a lot of them are going to completely disappear. There will be a few that are left over, and they will thrive. And some countries, maybe even this country, when everything implodes, we might maybe move to cryptos, maybe cryptos backed by silver or something in that range, but we don't know exactly what it's going to be. But what's important about this is that you can use this to your advantage, because you can watch it, and as it dips really, really low, you can buy into it, and you can watch it go up and sell off of it. And it's very easy to do. You can use Coinbase, you can use Bittrex, you can use Poloniex, you can use any of these, which allows you to get into the market. And I'm going to do a little tutorial video on this, because a lot of people are writing in asking, yeah, I see that's out there. How do I get into it? So look for that. I'm going to be putting that up on the News Flash YouTube channel. And this way people can see. I'm going to show you actually how to sign up, how to use them, and we'll go from there. Now, Nike, they are cutting around 2% of their global workforce, and that's around 1,500 employees. And what we're seeing right now is these large corporations, they're laying off a lot of people, and it's continuing. I mean, we see Toys R Us, their sales are down, and we see many, many corporations out there where they're just saying, listen, we need to start laying off, but they're keeping it very, very quiet. And I remember prior to the stock market coming down in 2008, there were a lot of companies laying off during this period right before the stock market came down. And we're starting to see the same thing once again, because think about it. If the economy has been recovering and the stock market continually rises and everything is fantastic like they're trying to convince us of, why are companies laying off? I mean, if the stock market's going up, doesn't that mean that the companies are doing well? But what do we see? We actually see the opposite happening. Stores are closing left and right. Corporations are laying off. People are looking for work. They can't find work. Because what we're realizing right now is that the economy is imploding on itself. And it's getting worse as time goes on. This is why the Fed decided to raise the interest rates once again, because they realized, okay, the economy is accelerating to the downside. Let's push this ahead. We need to bring it down. We need to control the narrative. And this is exactly what they're doing. If we look at manufacturing right now, manufacturing output, it dropped by 0.4% month on month in May. And we see industrial production, well, it looks like it's stalled. It barely moved above zero. Now, we did have this little bounce when Trump was elected, but it seems like everything is starting to fall apart now. And if we really look at this, the Dow Jones Industrial Average, it is up by 30%, but the U.S. industrial production, it is down 2% from its peak in November of 2014. They actually separated, and they're going in opposite directions now. So you can tell something is being manipulated here, and we know what it is. It is called the stock market. Now, since we're in this great recovery and the economy is doing so well, which the Fed is telling us that the economy is doing well, because they said, oh, unemployment looks good, retail looks good, inflation is holding, and everything looks great, and this is why we're raising the interest rates. Why is Illinois, why are they in tough shape? Actually, Illinois' economic growth is worse than during the Great Depression. I mean, think about that for a second. Now, a lot of the manufacturing, well, they left this area, and it's a very, they're having a very difficult time. But when we look at it, we can see that Illinois' total state economic activity has increased only 4% since 2007, which is lower than the U.S. 10% GDP growth during the worst decade of the Great Depression. There are fewer people living in Illinois working today than there were 10 years ago. Millions of people are leaving. And basically what we're seeing right now is a lot of people are saying, you know something, I can't stay here. There's no jobs. There's nothing here. So what is happening there is people are leaving. And Illinois now loses on net one person every 4.6 minutes to other states. This is how bad it is. And we can see that they are worse off than the Great Depression. So this tells us something. This tells us that nothing's really improving here. And if we look at other states, they're right behind it. And when this system comes down, it is going to be a shock to the majority of people in this country and actually around the world, because a lot of people have been sucked into this illusion where everything is fine and everything's okay. The economy's doing well. The stock market's going up. And we can see that this is just one big lie. And they've been lying for a very long time. Actually, according to Bloomberg's Mark Cudmore, he said the Fed has just brought the next recession that much closer. Actually, we're already in a recession. What he should have said is the Fed just brought the collapse that much closer. And he said that every time the Fed tightens, it always ends with a recession. The only question is when. And we can see, and we went over this yesterday, every time they raise the rates like this, every time they try to maneuver and tighten the economy, we end up in a recession, a depression. This time, we're going to end in a collapse. Now, we were discussing in other reports how important it is for trade, because as we know, once the dollar ceases to be the reserve currency of the world, well, the United States will not be able to ship dollars overseas. Other countries will not give us goods. We're actually going to have to trade with them. And we can see there are other countries that are starting to realize, yeah, the United States is done for. We need to look in other areas for trade. Actually, Japanese Prime Minister Shinzo Abe, well, he's looking to join the One Belt, One Road initiative. And basically what is happening right now, he is looking to join up. Now, he has certain conditions that he wants met. And these are the conditions that were in the Trans-Pacific Economic Zone. And what he wants is a harmony with a free and fair Trans-Pacific Economic Zone. And this is in reference to the TTIP. And we see right now that the Chinese Foreign Minister and Abe, they believe the One Belt, One Road initiative can be a new platform and testing field for China and Japan to achieve mutually beneficial cooperation and common development. So countries are starting to realize that the U.S. dominance is over. They need to look other places. They need to look other places for trade. And this is exactly what is happening. And most likely, we're going to see other countries start to join the Belt and Road Initiative because they realize that they need to look other places. Because what's happening right now is this economy is imploding on itself. The Fed signaled, yes, by raising the rates, we're accelerating the process. Now, think about this. They raised the rates when the U.S. at this point has lost about 5 million manufacturing jobs since the year 2000. And this trend has accelerated in recent years. 102 million working-age Americans do not currently have a job. This includes the 95 million Americans not counted by the Bureau of Labor, because they assume these people, they don't want jobs. Thousands of retail outlet stores, the primary engine of the American economy. Well, they're closing, a lot of them in 2017, thousands of them. Many of them are going bankrupt. And the online market, well, that only makes up about 8.1% of all retail sales. Oil inventories continue to amass as U.S. energy demand declines. Declining energy demand is a sure sign of overall economic decline. Corporate earnings expectations continue their dismal path, suggesting that stock markets have been supported by the central bank, that they've been propped up. Now, they know all this. They know the economic data does not support a rate hike. They realize this, and I said this before, they're going to do this in 2 stages, where the first stage is they're going to most likely blame this on Trump. They will say, this is what happened, we were raising the rates, and he, through his economic policies, didn't allow the economy to grow the way we wanted it to grow, and now we have to start up quantitative easing, some type of stimulus. We're going to have to start lowering the rates once again. We might even have to go negative, and we might have to start the universal basic income. Once they do this and they start pumping up the economy once again, we will most likely get hit with some type of cyber attack. This is the start of their plan. This is what they want to do. Does it mean they're going to be able to do it? Maybe, maybe not. Because we have Trump on the other side, and he is continually fighting to try to take control of the narrative. We have both parties right now trying to take the narrative of what is going to happen here. And we're going to have to watch to see how this plays out, because we know one thing for sure is that the economy is going to be coming down one way or another. And you don't want to be left sitting there going, okay, I have no food, I have no water, I have no cash on hand, I have no gold and silver, I have no weapon, I have no toiletries, I have no medical supplies, and inflation is out of control in this country. I ran to the supermarket and there is nothing there. What do I do? You don't want to be caught in that situation. You want to be ready and prepared for when this hits. And this is why I say most of the country is going to be in complete shock. They're going to be in denial. They're not going to understand what is happening. And you need to be ready, and if you can, explain it to your neighbors. But it's going to be very difficult because they're going to be very nervous and worried and scared, and they're going to be losing their jobs, and it's going to be horrific in the first couple of weeks. Things will eventually calm down, but people are going to freak out in the beginning. And this is why we've been saying get prepared, get ready, make sure you have all your supplies, because when it hits, it's going to hit very hard. It's not going to be a soft landing. It's going to be a hard landing. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.